Now, thinking about our holdings crashing in market value isn't a pleasant subject, or something that a lot of people want to spend much time thinking about, but nonetheless it's absolutely fundamental as rational investors that we seriously consider the effects of economic policy, and in this case taxation on the value of our crypto investments. And Charles Hoskinson, co-founder of Ethereum and Cardano, has said that the crypto markets could well collapse, including Cardano, on account of the Biden administration's new tax plans, which by the looks of things will increase the rate of capital gains tax for Americans holding their ADA, or any other crypto personally, from 20 to 43.5%, which is around double. And the thing is, because so much of the circulating supply of ADA is owned in America, and so much is owned personally by people who have significant gains, every ADA investor should be paying at least some attention to this situation, as it could be the catalyst for a major market crash not just for Cardano, but for other cryptos as well. Now, as you may be able to tell, I'm not an American, and so it's not my place to comment on whether this policy is good or bad for the country on balance, but I am a crypto investor, and as Charles Hoskinson pointed out, if the Biden administration do follow through on levying a higher rate of capital gains tax, it would likely cause the crypto markets to crumble, including ADA, which is one of my big holdings, and so I do have a big reason to be interested in this subject. You see, if the rate of capital gains tax is increased, it will mean a few things for ADA investors around the world. First of all, there will be a rush to lock in gains before the deadline by anybody who was thinking about selling anyway, but was maybe undecided as of yet. Anybody who was thinking of selling anyway will likely sell before this additional tax is implemented. Secondly, again there will be a rush to sell before the deadline by people who are sitting on large gains, as the higher the percentage of your portfolio that is pure profit, the more an increase in capital gains tax will hurt you. If I only have a gain of 10%, a near double in the rate of capital gains tax will only equate to a couple of percent of my overall portfolio value. But if I'm an early investor, and it tends to be the early investors who have the biggest holdings and are therefore in the top tax brackets, and 90% or 95% of my holding is profit, an additional tax will hurt me a lot more, and it's a big disincentive to continue to hold or own that crypto. Next, we have the fact that a lot of people will sell in anticipation of a decline in the market value of cryptos ahead of the implementation of this tax, and they will try to make a profit, but as always, nothing ever works perfectly and it's unlikely to be a clean maneuver. We have to account for the herd type behavior which is alive and well in the financial markets, crypto being no exception. An initial decrease in market values on account of a change in tax law or bad news usually acts as a catalyst for further panic selling and stop losses being triggered, and therefore forced selling and people who bought on margin selling out of fear of going negative. And all of these things feed off of each other and create a self-perpetuating cycle of price declines, which together make up a bear run. And having been in the crypto market for a few years now, I've seen the rapidity with which the sentiment in the market can change into things having never looked worse within days. And I completely agree with Charles Hoskinson in that the price of ADA and other cryptos will likely crash or at least decline by a significant margin if this capital gains tax does materialize into tax law. And again, because so much of the circulating supply of ADA is held in the United States, it will have a big impact on the market value of ADA and other cryptos, and will probably be a catalyst for further declines for reasons mentioned earlier. When you increase the tax on the profits made from an investment, whether that is an income tax on corporate income or a higher capital gains tax on value increases, what you're effectively doing is making it more expensive to own that investment, and therefore less attractive to own as the returns that I'm actually getting back are decreasing with higher rates of tax. If I buy 1 unit of ADA and it grows by 5 to 1 in 5 years, and the capital gains tax that I'm paying is 20%, I'll pay 20% on the gain, which will leave me with $4.20. But if I'm paying 43%, I'm left with just $3.28, which makes the same gain in the currency much less attractive, meaning that in addition to causing selling right now, it will also likely reduce future investment in crypto, which will cause prices to rise less than they otherwise would have, if not fall. Thanks for watching, and if you enjoyed the video, be sure to subscribe as we have more content like this out on a daily basis. See you in the next video.